It's Thursday and you're watching FreightWaves Now. I'm your host Anthony Smith and also the lead economist, and shortly I'll be giving a shipper econ update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Everyone, and welcome to your carrier update presented by PowerFleet. I'm Zach Strickland, and we continue to see our outbound tender rejection rate for the United States increase. We're up above 27% again. We hit above this just a few weeks ago at the beginning of November, and now we're back up over it again. So rejection rates, again, a measure of carrier acceptance or rejection levels, willingness to cover freight, as well as ability to cover freight. And a lot of this number has baked in a lot of unwillingness right now, but normally this time of year, we start to see that they're unable to cover freight baked into this number. So we should see this number and continue to increase into next week and beyond as a lot of these carriers and drivers start to come off the road, and they also get bound into their specific geographies. So let's break down the outbound tender rejection index into our two main modes that are in this number. Van and reefer rejection rates both on the rise, but you can tell that the reefer rejection rate there in the blue definitely a little bit more sensitive to capacity movements right now as they shoot up in July, and they really diverge from the van rejection rate back around sometime in the middle of August, as van rejections tend to start to kind of hover around where they are right now, which is around that 25 to 26% range. Reefer rejection rates have just been trending higher and higher. We're outside of what's considered normally their peak season in the middle of summer. Of course, demand was still in that recovery process during the summer, but right now they are just rejecting almost 1 out of every 2 loads that they are receiving right now on the reefer side. Van about 1 out of 4, but again, reefer really having a big year. A lot of demand for reefer activity as a lot of people are now purchasing their stuff online, changing supply chains. That cold chain is getting stressed quite a bit. Looking at the spaghetti chart here of all the regions in the United States of the reefer rejection rates, you can see that the Mountain Prairie over there in the yellow leading the way to 65% rejection rate. That is a significant amount of contracted freight. You might as well not even have a contract at that level of rejection. And then you look at, out there in the Northeast, 26%. So if you're a reefer carrier moving freight right now, you really don't have a lot of, not as much tightness in the Northeast, even though 26% is nothing to sneeze at in terms of an overall rejection rate. The rest of the country you can see hovering in there between the 40 and 50% range in general. For reefer rejections. Here's our region breakdown of what each of these regions looks like. So over there you got the Northeast, then you got your Southeast down here. You can see that they're both in white, relative to the other regions. They're not getting rejected as much. The West also in white. Of course, this is some of the largest volume areas of the country right now, but you can see our Mountain Prairie there, that's 65% represented with that darker blue, as well as the Pacific Northwest and the Southwest, also in that darker blue. As we did notice that they do have some of the higher rejection rates. Again, you can see the coasts, just like with van, the coasts are really getting a lot of the action right now and a lot of the coverage from carriers, whereas the middle of the country kind of getting ignored right now. And that's due to the fact that these power lanes that these carriers sit in, they're easily able to get back and forth. There's a little bit more balance going from east to west in that area than it is going, just these little hot shots in the middle of the country, especially around this low freight density area in the mountains. Looking at the van outbound tender rejection rates, you can kind of see this played out. The Northwest doing what it always does, not necessarily getting a lot of coverage right now, or getting a ton of coverage right now at 12%. Carriers just trying to get out of there, and then we have the Mountain Prairie for van, actually, again, getting, neglected right now. So let's look at where, each of these regions. We've got Denver and Salt Lake City, two of the biggest markets in the Mountain Prairie, 32 and 35% rejection rate, while up there in the Northwest, we've got Portland and Seattle at 12 and 14%. So if you're a carrier looking for some heated spot market action and maybe a potential high rate, I'd probably try to get into that Mountain Prairie and take advantage of it. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to the Shipper Econ Update. I'm your lead economist here at FreightWaves, Anthony Smith, and today we're going to jump into some of the latest in the economy. So last time we caught up, we talked about the ISM PMI Purchasing Managers Index and went over some of what's going on in manufacturing, and we're going to expand on some of those aspects right now. Behind me, I have industrial production. Now, industrial production is another barometer for manufacturing overall within the U.S. economy. And in the purple line here, we have industrial production, which blipped up just about 1.1% for the overall month of October. So good thing about the industrial production index is that it's very granular. It's put out by the Federal Reserve, and so it tracks a lot of durable goods and non-durable goods on the industrial front. Bad thing about it is a lot of times it's a bit lagged compared to some of the other mainstay data sets that we like to use at FreightWaves, but it does tell a story. And we're looking at the latest number for industrial production. We're seeing that there was a definite increase for the month of October, and there is some momentum building. If you remember last video, we went over the ISM PMI, and we saw that there was some momentum building behind new orders. And we're also seeing some of this go behind non-defense capital goods new orders as well, so business-to-business activity. But this is still very, very much below the year-ago level. So although we have a 1.1% monthly gain for October, it's still roughly over 5% below the year-ago level. So there is still some ground to be made up here. And of course, in the green line, we have our flatbed outbound tender rejection index. So that's also going to be one of the main vehicle types or trailer types that's going to transfer a lot of these manufactured goods. So we can see as typically when there is a lot of industrial production manufacturing activity, capacity is going to be a little bit tighter, showing that green line to usually modulate somewhere near that purple line in accordance to that. But again, we have daily data for our flatbed outbound tender rejection indices, so it's going to have a little bit more of a lead time. So it gives you a little bit of a preview of what's going on in particular markets when you're waiting on monthly releases. Next up, we're going to get into retail sales. That was another big release that we had not too long ago, and retail sales is a little bit inverse from what's going on in manufacturing right now. We saw that there was a positive month-to-month gain with overall retail sales, but the big thing here is that that momentum is indeed slowing. Although we saw just about a 0.3% monthly gain, this is substantially above the year-ago level, just over 5%, almost 6% percentage points above the year-ago level. So we are seeing some substantial growth here, but it is slowing. There's going to be some uphill battles as we get towards the end of the year. We have, of course, Black Friday level deals throughout the entire month of November for most outlets. We have Christmas coming up in December. But a lot of that's going to be hinged on if the consumers are able to actually make these purchases. We haven't had any additional stimulus from any kind of federal outlets, so there might be some sluggish activity for those that have been impacted by COVID-19, not really being able to keep up some of those spending trends. And we'll be able to kind of watch this closely as we get towards the end of the year. My expectations are that this area is going to be positive overall, but slow. A lot of the other areas within subsectors within retail sales are going to be a little bit more profitable, of course, or a bit more prosperous. Things like non-store retail sales, looking at e-commerce here, that is up 29% on a year-over-year basis when we're looking at overall growth. Another area that's going to be very prosperous, I think, going forward is, of course, gardening, building materials, which kind of leads into housing starts, which we'll probably talk to a little bit later on today at the midday market update. So be sure to tune in for that. Thanks so much for watching for this episode of FreightWaves Now. That's going to wrap it up for this episode. So be sure to check us out on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.